Here we have the 15-minute price chart for GameStop Corporation, stock ticker GME. Here we can see that we're caught in a bit of a sideways consolidation pattern here. This is a bit of a continuation based on what we've seen previously with this stock. Um, that said, probably, but all of that said, it probably feels like more of a sideways consolidation than it really is, though, because we have broken above some important resistance levels, and this does start to change the picture for what we're likely to, most likely to see into the end of this week, into the second half of this week. So currently, what we have to be aware of is the fact that we're really looking at support levels moving up to roughly 2380. We've seen this level tested on multiple occasions. We did even see a slight dip below here on just prior to the 4th of July holiday. This would have been June 3rd, where prices came in at 2365. But for the most part, we have managed to maintain this level here, and we are seeing slightly higher lows here. I mean, this is probably not so exciting for some people. Not much to get excited about here. But if we look at the prior lows from the Monday trading period, July 8, we can see that the lows here posted at 2385, and then the more recent price lows came in at 24 even. So these are modestly higher lows. So what this really does create here, it's a little bit difficult to see here, but what this really does create here is more of an ascending triangle pattern rather than a sideways trading range. I mean, as long as this type of occurrence continues, where we're seeing higher lows here, it really is more of an ascending triangle pattern rather than a sideways consolidation. We of course we do want to see some more forceful breaks here, and we'll kind of look at what needs to happen in order for those types of moves to take place. So, the first thing that I would point to here would be this exponential moving average cluster. Here we can see these four colorful lines here. Yellow is 20 period exponential moving average. Orange is 50. Purple is 100. And then the blue line is the 200 period exponential moving average. So, what we're trying to do here with prices currently, we're trying to see a break here above these lines, above these moving averages. This is really what is going to be needed in order to generate, some fresh upside trading momentum. And until this happens, prices are really kind of facing a resistance level, into these areas because there are so many of them. I mean, there are four of them. And it can be very easy to get caught inside of these moving averages, and then it can become difficult to get out of there once you kind of venture into that territory. So, really what we're looking for, in order to generate this upside momentum would be a break above these EMAs, exponential moving averages. And we're very close to doing that. I mean, it's not, this isn't very far away. This could be done within, roughly 15 cents. Currently, we're trading at 24.39, and if we just break above the 24.50 level, that should start to add some momentum to this stock. And then at the very minimum, we would next be in for a retest of these prior highs just above the $25 mark. So this is going to be a critical level for a few different reasons. This $25 level. Now, I am starting to firmly believe that this could be a breakout area, and there are a few reasons for this. It's not just that it's a big round number. I understand a lot of people like to focus on these big round numbers. Roaring Kitty, the strike price for his options came in at $20, so a lot of people are focusing on that level. There's no special significance to 20 or 25 or anything like that. These essentially are random numbers. But in this case, the $25 level is actually important for a few different reasons, and it's becoming more important as trading goes on. So I'll explain why that is here. So, the first thing that we need to point to is the fact that this level has really been tested at least three times. The initial test here came on July 5th, which would be the Friday trading session when we were just coming back from the holiday. And the market was trading in thin trading conditions. There are much fewer orders in the market right after a holiday like that. The increase in trading activity and trading volume normally doesn't return until the following Monday. So these are holiday thinned trading conditions. Low liquidity levels is really what that means. There's just not as many orders out there in the market. So during this trading period, we did see a break above this $25 mark. We did see highs of 25.07, but we really weren't able to maintain that level for very long, and then we did drop back below 25. This week, when trading volumes did return back to normal strength, we did see more decisive price movements above this $25 level. We even saw periodic closes above here on the 15-minute chart. So that's an encouraging sign. And it does suggest that we're starting to break through this, convincingly break through and erode the selling pressure that is present at this $25 level. And it's significant. I mean, it is starting to look like this is going to be the key to unlocking some major topside here. So, we did see a break above here, and an initial closing period above this level. So that does help to confirm the break. It's not a false break if we see prices close above there. So, we have seen a bit of downside retracement here, but we did get a third test of this level during today's trading session. And with highs of 25.18. So, as we can see here, we are breaking through this $25 level. Whatever orders are here are not having a significant impact. What I should say, whatever sell orders, whatever short seller orders are here, they're not having a significant impact here. I mean, the lows that we're really generating here came in at $24. So, we're talking about maybe a dollar in downside. um, you know, so it's not having a significant amount of downside selling pressure. Okay, so now we'll get back to the final reason here why I think that this $25 level is so important. So currently it represents a triple top, which is a major resistance pattern anywhere in the market. That's a significant strong resistance level. Okay, but in addition to that, this $25 level marks the 61.8% Fibonacci retracement of this dominant downtrend move. This is still the most dominant price move influencing this stock. We can't just disregard this prior downtrend. It is still the influential price move at the moment. And it will continue to be the most influential move in the market until we either break to the downside or retrace all of those losses, recover all of those losses. Currently, we've recovered more than half of those losses. The next line in the sand here comes in at 25.01, which is the 61.8% Fibonacci retracement level of this move that I'm pointing to here. So, a clear break above here invalidates all of this resistance. Okay, so it would invalidate a triple top and a major Fibonacci resistance level. So that's a lot of resistance to be breaking at one time, and it just so happens to be coming in at this $25 level. So normally I would not be pointing to these big round numbers. I think people get way fascinated with them for no reason. They're random numbers; they mean nothing. But in this case, I do think that the $25 mark has particular importance, and as long as we can break above these moving averages, which is currently happening as I speak here, you can start to see this right now. Like it's occurring right now. So if we see a clear break above these moving averages, we then, the next line in the sand here is kind of this 25.10 area. And then I do think that should unlock a pretty forceful move here to the top side. So here's the current market analysis for GameStop Corporation, stock ticker GME.